Understanding lenders' requirements. Okay. Anyone on Zoom want to read the first one for me? Anyone?
I can read that.
Okay.
I read.
Okay, go ahead, Alice.
Understanding lenders' requirement, capacity, future ability to make payments, income and job security.
Thank you, Alice. Okay, everyone. So you only heard people say there are 4 C's when lender look into your loan application. So the first C is capacity. The capacity meaning they want to know if you are able to pay the mortgage payment that you are borrowing, right? And how do they know if you are capable of paying back? They look into your income and your job security. Actually, they also look into your liabilities. Income and job security is important, but liability is also important because it affects it. So they will have to look into your income to see how much you make per month. We have another section of income calculation, but lender want to make sure after you pay your mortgage payment, after you pay your monthly home insurance, monthly property tax or HOA, you still have enough money for other expenses like food, gas, health insurance, car insurance, your kids' expenses, so many things.
All kind of bills.
All kind of bills. So if your income, if you make $10,000 and your monthly mortgage payment plus your monthly property tax and home insurance and HOA, if it come up 8,000 and your income is 10,000, no way they lend you, right? Because then you run out of all your money, 2,000, you won't be able to do anything. So they have to look at, and normally it's less than 50%. So if you make 10,000 a month, then your monthly mortgage plus monthly property tax, insurance, and HOA less than 5,000, then you qualify, right? But of course, there are more factors to include into the debt to income ratio. But right now, I just telling you that income is really crucial, very important for you to get the loan. And they look into your job security. They want your 2 year of job history to see if how long you've been in the job. Because if you keep changing job, then you might not have a stable job, right? If you in the company for more than 2 years, that may be a stable job for you. And they're not only looking into that, they look into the income 2020, 2021, 2022. And if the income keep going up, that means you are a good employee and you might be staying here for a while. If your income keep going down, they cut your hour every year, then you might lose your job very soon. They might not want you anymore. So let them look into that and they say this buyer, they don't have a good, income train, then they might not approve your loan. So that's why let them look into the past income. That's why you say, wait, you ask for pay stub, that means my current income. Why you ask for my W-2? Why you ask for 2-year W-2? The 2-year W-2 telling the lender if your income is going up or going down. And you might ask, why they ask for my tax return? I already give you pay stub, W-2, and now why you ask for tax return? Because some people in the tax return they deduct everything. For example, they have a W-2 income and they have a separate business income which they lost 100,000. Wait, you earned 100,000 from your W-2 and your business income you lost 100,000. That means you have zero income. See? Then they look at tax return because they find something there too. If you do business and you lose all your money, then you basically have no income. Then I'm not going to qualify you for the loan. Or somebody they have 10 property for rents, but in the tax return it's all negative. Then they not qualify for a loan. See? So in the past, I see a lot of doctors who make a lot of money, but they deduct everything. They don't qualify for any mortgage. So that's why investor nowadays they have P&L, they have VOE. You see, no program we don't need tax return because no investor they smart. They say I know there are a lot of people, they don't want to pay for tax. Their tax return look negative, but they make lots of money. So we created loan program for those people. The program name is P&L and VOE or no docs. We don't care about anything. So those investors, they aim at the people who file tax, all negative, but they really making a lot of money. See, but then because they make a lot of money, those programs require more down payment. You see, when you don't show tax return, when you don't show income, then you have to have more down payment. That's it. That's easy to understand, right? So if your client asks why I have to provide everything, that's how you explain to them. Then they're looking at everything. Okay? And the second C in capital, capital also means cash or reserve. Fund for down payment, we talked about this previously. Gift fund is only for owner-occupied property, not for investment property. So you buy a property for yourself to live in, then you are allowed to get gift fund from your family. Your money, normally for down payment, you submit in your saving account, checking account, 401k. You can use money from 401k for down payment. You know that, right? Good. The third C, collateral. The collateral is the property that we're purchasing or we're refinancing. Because when we apply for a mortgage, we actually use our property as a collateral for the mortgage, right? So lender want to know, okay, so what is the property value? Because if you want to borrow $1 million loan, the property value has to be a lot more than $1 million, right? So that's why they want the appraiser to go out and look at the property, take a picture and create a report in detail about the property. The lender doesn't go to the property, but the lender will look at the appraisal report to understand the condition of the property and how much it is. Okay? The property is really important. The value of the property is really important because lender have guideline on, okay, if you want to cash out, this is your maximum loan to value, right? For example, FHA loan, the maximum loan to value for cash out is 80%, right? Then if the property value is $1 million, the maximum loan amount is $800,000, right? Lender based on LTV to give the client, the borrower, the amount loan they want. But in order for them to do that, they have to look at the value of the property. So appraisal credit report, they want to know if this person is responsible for his debts. Is he paying everything on time? Or he always late? And also, somebody, he maxed out everything. Then, is this a good borrower? Because look like he spent every penny he has. Will he be able to pay his mortgage, right? He doesn't have a house yet, but look, he borrowed money left and right. He spent all his money. He is a good borrower, right? They look at everything. Of course, the score will show. If somebody maxed out their card, their score is really low, really low. And that's why lenders set a standard for credit score. In order for you to get a loan with conventional loan, your middle FICO score has to be at least 620. 620. Because if somebody maxes out every single card and late payment all the time, their score is like 500 something. They're not qualified for any mortgage, right? So score would tell the person behavior of their liability, right? And then they also look at trade lines. See how many trade lines the person have. Normally they require minimum 3 trade lines, right? And trade line can be student loan, can be mortgage, can be credit card. So if somebody has 2 trade lines, then they need to get another credit card or something, okay? So then they look at all this when they pre-approve or approve a loan. Any question before we move on? Any question, anybody?
PG&E bill shows up on the credit report.
Huh?
PG&E bill.
I don't think that show on the credit report. I should not put the bills there. I should take away that. I should put paying debts. Okay. But, okay.
Michelle,
Yes.
hello, can you hear me?
Yes. Go ahead.
Oh, okay, thank you. Sorry. You said that trade lines, did you say 3 is minimum?
Yeah, we need three trade lines. We need three
Okay.
trade lines, yes.
Okay, thank you.
Go back to the bills. Sometimes when people don't pay their medical bill, they got collection, it show up in their credit report.
Really?
Yeah, and if you don't pay your property tax bill, it show up on your credit report as well. So I should leave it there. So they look
That's
at
true.
everything.
Child support.
Child support, yeah, it's showing up. So credit report, lender, they look at every single thing about you in terms of finance. So they know really well about you before they lend you money, but they smart. They lend you a lot of money. You should know about it, right?
And how about utility bill?
Utility bill, if you don't pay it, it also show up on your credit report. Or, actually, utility bill, it show on your prelim report. Utility bill, if you don't pay it, it's so funny. It show on the prelim report sometime. Okay, I think utility bill, tax bill.
No, last time I had a client, utility go to credit report.
Credit report. So that it go to both, I think. It go
And
to
you go
both.
to like collection
Collection.
and make the score so low.
Exactly. Good, Gina. So utility bills, all kind of bills, if you don't make payment, it go to both places. Not just credit report, it go to your house too. So it show up in the prelim report. It's happened. So make sure you tell your clients, if you have a debt, make sure you pay it. You have to pay it, otherwise it leans on your home and in your credit report. It show up everywhere and it's hard for you to move on.
Question here.
Yeah.
If I have a house and the tenant lives in that house doesn't pay utility on time, what happens to it?
Do you have their social security number? You can, if you have, okay, once the tenant rent your home, right? You have to collect their social security number. And when you collect the social security number, you report them and that go into the report. You see that? The security link with your credit report. Whatever you didn't do right, and if somebody have your social security number, you can report you and it show up on your credit report. So your tenants have to give you their credit report, social security number, and you have to run the credits before you rent a home to them. Always run the credits. As an agent, you can do extra service to your client, to your real estate investor, by providing them credit report. Of course, you don't have to give it for free. You say, okay, you are renting a house and you need help with the credit report or credit check, I can help you. And they have to pay for the fee, but they know, right? They know if they renting to a good tenants or not. Okay? Any question? Good question though. I like question because that make it clearer, and sometimes I learn from the question too. Any question?
I have a question.
Okay.
Yeah. Sorry, because my phone didn't work before. You're talking about the 2-month bank statement. So what if the borrower has that money before the 2 months?
That's
Would that be
good.
okay? Would that be an issue for them?
No, that's even better. Okay. For example, let me clear it out. If your client give you bank statement of February and January of 2023, and in both bank statement they have current balance of 200,000, it doesn't show any deposit. That's the best bank statement you have. That means all the deposit made before January. we call clean bank statement. We love those bank statements. If the money just deposit the last 2 months, January and February, and if it's just their income, that's no problem. But if the money deposit is not their income, and it's larger than their income, we have to explain to lender. So if somebody have money season 2 months, 3 months, 4, 5 months before they buy home, that you have very good buyer who ready to buy. And we love to have those loans because they're easy to do. Good question.
Thank you. Another question, you mentioned about the rental properties. So the lenders would require the P&L.
No,
Did the borrowers have the rental properties?
No, the rental properties, lender will ask for a tax return, and in tax
Yes.
return, Schedule E will show the income and the expenses of all rental properties.
Okay,
Lender look into Schedule E for rental properties.
thank you.
Of course, good question. Okay, we're gonna move on. Okay, guys, I want to remind you what kind of loans we offer here at Pacific Y. At Pacific Y, we offer mobile home loans. We can do mobile home loans, everyone. That's awesome, right? HELOC loan, and we have jumbo conventional loan. Our jumbo loan jumbo loans now have very good rates as well. Now conventional loans, we can do FHA loan. FHA loan is for homeowner who have low down payment. Low down payment meaning they only have 3.5% for down payment. By the way, conventional loan, the minimum down payment is 3%. 3% of $1 million is how much?
30,000.
30,000 only. If they qualify for the mortgage, they only need 30,000 for a down payment, right? With conventional loans, so maybe what is the maximum conforming high balance? Maybe that's too much. We have to go down on the price. Maybe somebody buy a 900,000, oh no, I mean 800,000 home, and then they do 3% down payment for conventional, that for sure. FHA loan, VA loan means zero down payment. FHA loan is 3.5% down payment, VA loan is 3% down payment. And remember, we still have no docs loan, everyone. That means we don't need any documents, okay? We only care about credit score and down payment. And we have P&L loan. We talk about P&L. P&L for people who file tax and have all negative income, but they're really making income. Then we have P&L loan for self-employed people. We have VOE loan for people who have W-2 income, but they don't want to sort of tax return. We can do VOE loan for them, no problem. We have IT loan. IT loan is for people who have no social security number, but they file tax in America. IT stand for individual tax, identity. What is it? Individual tax identity number. Okay. Individual tax identification number. Individual tax identification number. Okay. I have problem with these things. Okay, and then we also do loan for 5 to 8 unit loan. Okay, so remember, we can do all these loans at Pacific Y. All you need to do is contact our mortgage team to get it done. Is it easy?
All these
Yes.
loan program require minimum FICO score 660.
No, different loan programs have different FICO score. I'm gonna review them pretty soon. This year I'm gonna review all loan programs for all of you. But today just the introduction. Actually, you should know about it all the time. But I'm gonna go back and review each loan program so that everybody will be on the same page. Okay? I think that's the last slide, right? What is the next slide? Okay.